President-elect Donald Trump returned to his hometown of New York City Thursday to ring the opening bell at the New York Stock Exchange. Wall Street investors appear to have embraced the incoming administration. All three major stock indexes have hit record highs since Election Day. As of Thursday, the Dow has risen more than 5% from November 5th. The S&P is up nearly 6%, and the tech-heavy NASDAQ is up nearly 10%. During an interview, Trump was asked about his message to American investors.
Well, I think you're going to see some very good days ahead. A lot of incentives are going to be given. We have to conclude a couple of bad wars that are going on. A lot of bad things are going on, but we'll get them done.
Let's bring in CBS News MoneyWatch correspondent Kelly O'Grady. So, Kelly, how do investors think Trump and his policies will help them?
So less regulation and lower taxes. You know, President-elect Trump has really campaigned to the investor community that he's going to have a lighter touch regulatory environment. So that means easier mergers and acquisitions, easier to get things done quickly, less red tape. And he's also vowed to bring down the corporate tax rate. Remember, he did that during his first administration. It's already pretty low, but he wants to lower that even further to 15%. That would take an act of Congress, but investors like this type of rhetoric. And I can tell you, I was down there today. There were chants of USA, USA, USA. People were excited.
Are investors at all concerned about what we keep talking about, which is his tariff proposals? I mean, Trump just himself said in a recent interview he can't guarantee that Americans won't pay higher prices as a result.
This is what I find really interesting, because I can tell you businesses and consumers are concerned about that. They're saying, wow, you know, this could really hurt profits, or we pass that on to consumers. Investors don't seem to be trading that way right now. We're really just seeing this, what we like to call animal spirits. It means you're trading on optimism and vibes.
Okay.
I think where it's going to be interesting is when January comes and he does take office and we do see, are these threats or are these going to be put into action? Exactly. Then you could see the stock market maybe react negatively.
Are all of the stock gains about Trump, or do other factors play in as well?
Rate cuts. Okay. So you mentioned it in the headlines that you just talked about. The producer price index was hotter than expected. That's important because when companies pay more for the goods they buy, they pass that on to us. We're still expecting a rate cut, though, next week. And the market is saying, we're excited about this, we want this, and they're trading on that. Where, again, I see things potentially going awry is next year we're expecting less rate cuts. And even though that may have nothing to do with Trump, you could see a Trump stock market just react negatively if you're not going to have as many rate cuts.
So we've been talking mostly about investors, but what does this mean for the average person who may not be invested at all in the stock market, or maybe they just sort of do like a set and forget investment account for retirement?
Right. I don't want anyone to have FOMO and just pour the money into the stock market, because we are seeing investors just push these indexes and these equities to heights that we haven't seen. But depending on where you are in your career, you want to have exposure that matches the risk that you're willing to take. So, you know, the set it and forget it is not a bad strategy, simply because, you know, you are in a diversified portfolio. But yeah, don't throw all your money into one stock.
Okay. Always good advice. Kelly O'Grady, thank you.